Let's start. The Wednesday watch list whittled down. So I will go through a list of stocks, looking at all the metrics, on the microcap. They are microcaps, they are sub 100 million. They all got revenue. After each one, you let me know on text whether it's one for the watch list or one to ignore. Okay? One other thing. Here's the twist in the tail. I bought one of these at 4:05 today. Okay? So I'm not going to tell you which it is. I'm going to go through all these companies and you'll say, ticker yes, ticker no. Okay? Okay. Let's get into it. Argentex. Now, what I don't understand, right, is I understand some of this cash, 33 million, is restricted because they do, effects and they help companies, move their money around and stuff. They had 33 million and did a fundraise. I didn't really read into it because, I did say whenever a company comes up with a profit warning, I keep finding myself, quoting my book here, but they are like flying ants. They don't exist on their own, profit warnings. And people tend to jump into stocks when the share price is going down massively. No, that's a downtrend. Another profit warning will come out. So what happens generally, the cycle of profit warnings is they'll do a trading update, which will say, oh, it's not been good. No, no. The share price will shoot down, private investors will jump in, and then they'll do the results, which that trading update was previewing, and there's more worse news there, and so it'll probably drop again unless the outlook is amazing, which generally it isn't, and then a recovery play can take months, maybe even years. So there's no rush to jump into any stock. Wait for the fundamentals to improve, and wait for the trend to start in the uptrend. And I keep saying this a lot. I find it amazing how many people jump into businesses that are not improving. And if you go to a real world example of companies, that when you invest in a company not listed that wasn't improving, make you say, invest in this company, I'm doing awful. It's going really badly. Everything, I'm not getting any orders at all. I got no cash. Skint. Do you want to invest in the business? Would you say, yeah? So just because the stock market, people expect it'll bounce sometimes. People do. But just think of that. Is the business improving? And I think that, by just adding that filter, you'll cut out so many stocks. Anyway, I think I've swayed the pitch here, or queered the pitch here on this one. Argentex. So here we are. Here's the tail of the tape. Share price, 34 pence. Target price, 65. In fact, the brokers have pulled targets at the moment, so ignore forecasts, but that's 91.8% upside. It's a lot of green here. And I did like this company. I owned this company before, and I got out when it started rolling over. 38 million, enterprise value, 5.9. But remember, some of this is restricted cash. It's not all there. Some of it's client cash. So I find it very awkward trying to work out what is not. Anyway, decent volume, all green, no debt, operating cash flow 13.6, free cash flow 8.9, dividend yield 2.18, but they've cut the full year dividend to save money. This makes you worry a bit. Why are they saving money? How much of that cash, don't they have control over? So they've raised money as well. But anyway, it's got significantly worse. The half year results, it's gone down to this there. But the value now is looking very good. So growth is still good. But the outlook and the board has been kicked out, everything, so it's major change going on. The value is looking good. Like I say, value can keep looking good unless you have growth to power the upside. It can keep going down and it can keep getting more. What's it good? Just cheap. It can keep getting cheaper. That's why I love that. Watching stocks that can get cheaper and cheaper, and all of a sudden they come out with a bit of good news and it'll rally. So keep an eye on that. Anyway, health, decent health, no debt, current ratio 1.6, efficiency, all good. Look at the margin, the operating margin. In fact, it was better than that. But momentum, all red. And in fact, if you go up the scores here, you can see there, growth is okay, value is good, health, potential, all that's good, apart from momentum and growth. Two of the three most important metrics there are not in the right color. All right. Let's have a look going forward. In fact, we should ignore forecasts, but I put 10% growth on from where we are. But the brokers will say they've pulled forecasts because it's in a bit of turmoil. This company came to the market when when it started to rally, it started to look very good. And I bought on the Golden Cross pretty much, which is here. And you can see here, you can see a definite line. See, I mean, the more you look at charts, the more you'll see sort of, look at that there, that line here coming down. And in fact, you can draw a downward line here on these sort of highs. And you can see the first time I sort of broke that. And in fact, let's get it up a bit there. Broke that was here. And then you can see almost across the bottom, it was a rising sort of a series shallow higher lows. That's the first thing that starts happening. A series of higher lows. And then it's hitting its head on this vision here and it breaks above it. Nice break here. I bought some, I think, round about here when it broke up. And then I didn't have a lot in. And they had to come up with a trading update and it just gapped up nicely. Oh, that's nice. I would have liked to have more in, but I prefer to go that way and have a small amount in than that way and have a big amount in, So, and they come down, average up here, went up here, and they started rolling over. And for some reason, there was something, I don't know, something whiffy about this. And like I said, here, top line, come back down. And since then, look at that now, downtrend. I did say, boom, boom, series of lower lows, lower highs. Anyway, there. So anyway, Argentex, ladies and gentlemen of the jury, of the stock picking jury, what do you say? Are you saying AGFX, yes or no? Let's have a look. Alan, no. Rob, agree. AG, yes, you bought that. Edmund, yes. Andrew, AGF, no. Rob, don't worry about what I bought yet, Rob. It'll be in this list. AGFX, no. Harris, no. Chris, no. Simon, no. No. Wait to see what happens. No. Mick, Brian, no. AB, no. Tim, Graham, all no's pretty much. A couple of yeses. But I'll tell you what now. It was, and it's in fact it's on my watch list actually already. But I haven't, bought that. It's only on watch list, so I keep an eye on it because I think potentially the margins could get, better. They can improve. This is a potential good recovery play if they get it back to order, they revert to norm. But they're nowhere near that, it seems. I want to see a trading update come out from them that says, "Oh, well, it's not too bad actually. We're good, okay, yeah, it's all right." So that's what I want to see. But as yet, it's not there. But keep an eye on it. But don't buy whatever you do. Okay. Cornerstone.